You hear the word stock all the time, right? It's on the news, people talk about it, but what does it actually mean to own one? Well, in the next few minutes, we're going to pull back the curtain on that mystery. We'll break down what a stock is, why companies even offer them, and what it really means to be a part owner of a business.
So, let me start with a question for you. Have you ever looked at a huge company, like Apple, or maybe even just your favorite local coffee shop, and thought, man, I wish I could own a piece of that? Well, guess what? That's exactly what a stock allows you to do. And that simple idea, that's the foundation of the entire stock market.
Okay, first things first. Let's get right to the heart of it. What does it mean to own a share? Because it's so much more than just a number you see on a screen. It's about having an actual, tangible piece of a real-world business.
So what is a stock, really? Put simply, it's a tiny slice of ownership in a public company. The second you buy one, bam, you're a shareholder. You might hear other words for it, like equities or shares, but they all mean the same thing. You are now officially a part owner.
Probably the easiest way to picture this is to think of a company as a giant jigsaw puzzle. Every single share of stock is just one piece of that puzzle. So the more pieces you collect, the bigger your part of the picture, the more of the company you own. It's a pretty simple and powerful idea when you think about it that way.
Okay, but that kind of raises a question, right? Why would a successful company want to sell off little pieces of itself to just anybody? Well, it's all about one thing: fueling their engine for growth.
It pretty much works like this. A company needs money, or capital as it's called, to expand. To build new factories, invent new products, or hire more people. To get that cash, it issues shares to the public. People like you and me buy those shares, and in return, the company gets the money it needs to chase its big ambitions. It's one of the core engines of our whole economy.
So, the company gets the cash it needs to grow. That's great for them. But what about the shareholders? Let's flip this around and look at what you, the investor, actually get for having a stake in the game. As a part owner, you actually get some really important benefits. First off, you have a claim on the company's earnings and everything it owns. Second, you might get dividends, which is just a fancy way of saying the company shares its profits directly with you. Pretty cool, right? Third, you often get voting rights, which means you get a say in big company decisions. And of course, the more shares you own, the bigger your piece of the pie gets.
Now this all sounds fantastic, but it's not a one-way street. We have to talk about the big trade-off at the heart of all investing, the relationship between risk and reward.
Let's start with the reward side, because this is what gets investors so excited. When you look back through history, stocks have, on average, delivered much higher returns than safer options like bonds or just keeping your money in a savings account. Over many years, that difference can be huge, and it's why stocks are seen as one of the best ways to build wealth over time.
But, and you knew there was a but coming, right? That awesome potential for higher reward doesn't come for free. It comes hand in hand with higher risk. The value of your little puzzle piece isn't guaranteed to stay the same.
And that risk has a name: volatility. It just means that stock prices can swing up and down, sometimes wildly, based on everything from big economic news to just plain old market sentiment. The value of your investment can go down just as easily as it can go up, especially in the short term. So with all that bouncing around, you might be wondering, why on earth would I take that risk? Well, it comes down to this core truth. Even with all the short-term ups and downs, stock investing has proven to be one of the most powerful ways for people to build wealth over the long haul. So, how do investors manage that risk? The real secret is all about perspective. Investing in stocks isn't about trying to get rich overnight. It's about playing the long game. It's about betting on a good company's success over years, or even decades. That long-term viewpoint helps you ride out all those bumps along the way.
All right, so let's bring it all home. A stock is way more than just a symbol on a screen. It's a real piece of a real company. And companies sell these pieces to get the cash they need to grow. In return, you get a piece of the action, a claim on the profits, and the potential for real growth, as long as you're ready for the risk. So now that you know the basics, here's a thought to leave you with. What company out there would you want to own a piece of?